My lead source tonight is Republican from Montana, Senator Tim Sheehy, and it's great to have you here. As for what you're expecting on Wednesday, how expansive do you think these tariffs will be?
Well, fundamentally, I think the point is the intent of what these are aimed at doing. And I think a lot of the economists that have been referenced a lot here, they're focusing on kind of a late 20th century economic model, which really has been the bedrock of how the stock market reacts because they want certainty. And they've built their models around an economic model that has the United States has reformed its industrial base from what it used to be, which was a manufacturer and an exporter of key goods, to one which we have encouraged through our national fiscal policy to send manufacturing and heavy industry jobs overseas. And that's exactly what's happened in the last 30 years. And what it's really been is an upward transfer of wealth from blue-collar jobs, middle-income jobs, to the finance sector and to tech sector. That's not all bad, but it does have impacts that we have to accept are real, and that is hollowing out a lot of our rural communities and manufacturing communities. And the intent of these is to bring a lot of those jobs back and reinvigorate industries that are key to America. So I think on Wednesday what we're going to see is a very clear policy that says we want businesses to invest in America. And if you don't invest here, and if you're not doing what's right for the American worker, you're going to pay the price.
But do you support what this is going to look like on Wednesday? Are you prepared to say that you do support it, or are you waiting to see what the details are?
Well, first of all, as you've even heard Kevin Hassett just say, the chair of the National Economic Council, we don't really know exactly what's going to look like yet. And the president is in the process of making his decision of what that's going to look like in actual final form. But I think we've pretty clearly seen what it does look like in draft form, which is we expect things that are good for our people, reducing fentanyl flows into this country. He's made very clear to China that if you're going to continue to import precursors and fentanyl itself into our country for the specific purpose of killing our people, we're going to use tariffs to make that stop. If you are Colombia and you're refusing to take back illegal, criminal, violent aliens that have come here, we're going to tariff you. If you're Mexico and you're not helping us secure the border from massive illegal immigration, we're going to tariff you. So the tariffs have both a broader intent to reform the economy and make world trade fairer for the American taxpayer, and they also have very specific targeted intent that makes sure we're stopping a lot of things that have been going on that are bad for the country.
Yeah, the White House seems to be making this argument that maybe there's short-term pain but long-term gain here. But you just mentioned some of those countries. I mean, I was looking at the numbers. 95% of Montana's imported goods come from Canada, Mexico, and China. Is this going to hurt people in your state, you think?
There's absolutely going to be short-term pain. The president's been clear about that. Everyone has. I mean, if you're going to remodel your house to make it better in the end, it's going to be really annoying in the short term when your house is getting remodeled. And there's drywall dust everywhere and there's workers in your living room. The reality is that remodel has got to happen in order to make things stronger and more stable on the back end. We've had generations now of countries taking advantage of the strong American economy, the strong American workforce. That's happened in Western Europe, where they have not had to pay for a military, they have not had to pay for an intelligence construct because we've essentially provided them a free umbrella for security. South Korea is a similar situation. They've had an amazing economy based in manufacturing and technology that has benefited from the fact that we've had 20,000 troops on the 38th parallel for 75 years, allowing them to exist. So, and it's not de-linked from tariffs. This whole broad construct of America First really outlines that America has underwritten the prosperous 20th century for the entire world. And now what is happening, as we're looking down the barrel of unrecoverable debt and deficit spending, it's about time we start to rebalance those tables and ensure that we can bring investment back on shore. And that's happening. Companies are announcing $2 trillion of investment back into our economy.
You're comparing, but there's a lot of companies that right now are doing nothing because they're waiting to see what the policy actually is. So there's actually a lot of, there's not a lot of mergers or anything happening because people are nervous about this. You liken this to a remodel. Sometimes those take longer than you plan for. I mean, if you're an American and you're waiting to see what does short-term pain mean? I mean, how long do you expect that to last?
I mean, we don't know. And of course, I'll add a lot of the media frustration with the uncertainty around President Trump's new economic
media,
strategy.
Business uncertainty.
Oh, sure. But, the media is helping with that. I mean, business uncertainty responds to public market sentiment. There wasn't nearly as much pearl clutching when we had record inflation, record interest rates, record cost of good increases for middle-class families over the last 3.5 years. And these policies are meant that digesting $5 trillion extra dollars pumped in the economy is going to take some time. Digesting record government spending growth and record government job increase. A lot of the job increases that were advertised during the previous administration were advertised as organic economic growth, when really what they were where they were government agency expansion, hiring hundreds of thousands of workers to create and to support the economy. It was very much like, you know, the New Deal under Roosevelt, saying.
Well, also, it was digging out of the COVID economy. But I mean, and speaking of jobs, I mean, we saw Stephen Moore, who was one of Trump's economic advisors last time, say those aluminum and steel tariffs actually hurt manufacturing jobs. There were 10,000 manufacturing jobs that were gone. But on what people are dealing with every day, some people are scrambling to buy cars ahead of Wednesday's tariff announcement. When the president was asked this week about automakers maybe raising their prices, he said, I couldn't care less if they raise prices because people are going to start buying American-made cars. Right now, there is no such thing as an all-American car. Obviously, cars that are made here have a lot of parts that come from Mexico and Canada.
But that's the very point.
Is that your reaction, though? You don't
I think
care if people pay more?
You just mentioned, I think, the very heart of the issue is there's no American-made cars anymore because our government policies have incentivized not to make them here. They're not made here because we couldn't make them here, or the American worker didn't want to make them here, or somehow there was a force field preventing us from making cars here. They stopped making them here because our government disincentivized companies to make things here. That was an intentional policy, and other countries saw that and reacted and said, listen, if America's not going to encourage companies to make things in America, then we'll make them here for cheaper and dump them into the American market, especially when we have a strong dollar. We have incentivized, I mean, just like water and gravity. You have a higher piece of dirt, the water will flow off that elsewhere. We have encouraged, now we've had a very strong finance sector, a very strong tech sector. Those are great things. We want that. But that has come at the expense of other industries.
But automakers can't just switch things overnight. I mean, the president talked about how he gave them a 1-month reprieve before these tariffs go into effect, but they can't switch production in a month. I mean, that takes years. So are people going to be paying more for cars for years? And the sentiment is, I couldn't care less, as the president said?
There'll certainly be a transition period. And I think in anything there's a transition period, like we saw during the COVID economy, when we were pumping trillions of dollars in and creating a false economy of government spending. What will provide certainty is when we make the Tax Cut and Jobs Act permanent. So companies know in permanency what the U.S. tax code will be. It won't be a temporary thing that immediately goes back to a penalizing tax code. When we can provide regulatory and tax code certainty to American investors, global investors, and businesses, they can say, okay, now we know what the American tax and business landscape will look like in perpetuity. We can invest in that. And in the next 48 to 72 hours, and hopefully as we see what the Senate and House does over the next couple of weeks, we can make these tax code changes permanent, the Trump tax cuts permanent, and now we have the type of certainty that businesses want to invest in.
Yeah, we'll see what that looks like. I also want to ask you about farmers generally. During the first administration, they had to bail out farmers. It was about $28 billion at the end of the day. Do you expect that is something that the administration will need to be doing again this time around?
I mean, I'm not sure it'll have to be at that scale. What we're going to have to...
Won't it be bigger if there's more tariffs against more countries and they're retaliating in a wider fashion? Yeah,
it certainly could be. In the short term, it could be much less in the long term. There are a lot of, as we talk about regulatory certainty, there are also a lot of policies in place that disincentivize investment in American agriculture. A great thing, you know, is the death tax. We penalize family-owned farms and ranches for staying in the family by forcing those families to pay an ungodly sum in taxes when they die. They essentially have to sell the farm or ranch to pay the taxes on the farm or ranch for the inheritance estate tax that comes to the family who doesn't have the cash on hand to pay it. So this is what we're talking about when we have common sense policies that should be in place that are not. And we've seen a massive consolidation in the ag sector because the cost to carry that land, whether it's interest rates, whether it's inflation, or in this case, whether it's the estate tax that has to be passed on to the family, which usually entails having to sell the land.
But on tariffs themselves, do you expect that you as a member of Congress will have to vote to bail farmers out?
I mean, we're going to be there for them if we have to be.
And you would go bigger than $28 billion if you need to?
I mean, we don't have a metric on it yet. I mean, the landscape is just different than what was last time. But I mean, we have to protect our ag sector. I mean, we have to be able to feed our country.